It's a new trading weekend. The major U.S. stock averages are trading nearly flat. Joining me now is Peter Cardillo of First Standard Financial. Peter, good afternoon. Thanks for joining me.
Good to be back.
Well, first and foremost, as we kick off a new trading week, we are still seeing trading above 20,000 for the Dow Industrials, but a lot has happened since last week. So given everything that's happening geopolitically as well as policy-wise and economic data-wise, what do you make of what we're going to see this week?
Well, I think it's a market that's seeking direction. You know, on Friday we had a very strong rally, and it was mostly based on the labor data report, which actually came in much better than expected, because we did see jobs growth in excess of 200,000 without any signs of wage pressures. So wage inflation seems to be pretty much still contained, and a good indication that the economy is probably going to still show signs of growth. But of course, you know, the fact that Mr. Trump on Friday signed an executive order basically wanting to water down some of the regulations is a good thing, and the market rallied on that. Of course, too much of a good thing could be a negative factor going forward. But nevertheless, you know, I think the market now has reached levels where we could be in for a short-term technical pullback.
Well, Peter, you answered a lot of my questions right there regarding earnings and geopolitical concerns. So I want to switch your focus on over to interest rate expectations. Now, we had the Fed Reserve meeting last week. We didn't have a press conference, but we didn't get any direct indicators in terms of when the next rate hike will be. And today we got comments out from ECB President Mario Draghi about how they won't be withdrawing stimulus immediately. So given those indicators, what do you make of the central banks?
Well, I want to address what Mr. Draghi said, and I'm in complete accordance with the fact that protectionism is very dangerous and could cause some serious problems for the global economy as well as our own economy. So I think that Mr. Draghi has that right. And I think that's one of the reasons why the Fed, basically is not giving us any indication.
And last but not least, while we're talking central banks, I do want to ask you about what you expect to see in the currency markets. Now, at least for today, we're seeing mostly higher trading for the U.S. currency, but the currency has been weakening since the beginning of this year as well as the end of last year. So given what we're seeing in terms of comments and rhetoric about the dollar's strength, what do you expect to see this year?
Well, you know, the dollar today is up a little bit, and I am bullish on the dollar, but I must confess that we need to probably protect ourselves on the downside. Again, I think right now the dollar is in a wait-and-see attitude. One, due to the Federal Reserve. Second, due to economic data. And third, probably the key as to whether or not Mr. Trump, whether or not this administration is going forward with creating a possible protectionism scenario. And if that were to happen, then I think all bets would be off for a strong dollar, and we could see real renewed weakness again.
Okay, Peter, well, that's a lot of ground to cover, so thank you so much for your insight today, and I look forward to speaking to you at the beginning of next week.
Thank you.